welcome back to my channel for another video on technical analysis in AMC stock. Today was a red day, down 5.04%, ending the day at $39.16. It was a wild ride, big sell-off. First, I want to start off with a shout out to my first commenter yesterday, Volsung. Congratulations, you're on my one-day chart. If you want to be on my one-day chart, leave a comment, say first, be first, and you'll go up here. As you can see, several people have done so, and they've all been on here. You can be too. Now, let's talk about what happened today. I think today's opening was completing a small pennant. Very small. I don't like to do a whole lot of charting on the 1 minute chart because these patterns that are this short are not very reliable, but today it was actually pretty useful. We saw the price rise, encounter this new upper trend line, reject, bounce, and then fall through. And there was a couple of moves here. You're going to see the downtrend started and bounced. This is like a 1, a 2, and then a 3. This 1, 2, 3 movement, this is a good wave pattern. And the price at which we knew that there was further downside action to come was when we broke below 40, which seems like really an obvious thing since the $40 support zone has been so critical for so long. But here I actually calculated the price target from the triangle and came up with $40. It was really $40.02, but 2 pennies, you know, let it go. When the price did fall below that level, it did gravitate towards it before falling further. And at this point, I swung trade some puts because you might as well make some money on the downswing. So I did. The price continued to fall until it reached about $38.06, I believe. And this was within range of one of my price targets from the 15-minute chart. Before I turn that on, I want to cover some of the other things on the 1 minute chart. First of all, this volume spike at the very end of the day. 368,800 shares coming in, and the candle being green right before market close. And you can see that this was kind of the climax of an increase towards the end of the day. What drove that buying, I think, was this optimism shown in the implied volatility. Now, as the price drops, we've been watching the price drop with it. Or as implied volatility drops, we're watching price drop with it. But what happened today is, after that bottom was put in, this modest bounce caused a pretty good rise in the implied volatility. And as the price consolidated in that area, even barcoding for a moment, the implied volatility did not cease to gradually rise. And this gradual rise in IV, I believe, is the enemy for the bears. You can see that these spikes have been happening at market open almost every single day for a while. The only exception was today, and we did see this spike downward, and then it just popped right back up, like no problem. And then, of course, today we saw this rise towards the end of the day. And so this gives me room to feel bullish. And why I feel bullish watching implied volatility is related to how implied volatility is used to calculate the premium and call options. Again, I'm waiting for a spark to light this bed on fire. There's just a bunch of open interest and price targets on my charts going up, and I think we could see another June-like run. Seeing this implied volatility start to rise helps signal that. I'm going to turn on my 15-minute drawings now over my 1 minute chart just to get some more definition into my 15-minute chart drawings. And I'm going to zoom back out. What do we see? I think we have another inverted head and shoulders coming in, and it's in blue. So the first shoulder was seen 2 days ago, or yesterday, and then today we saw the head form. This would imply that a run is coming, and I think that's consistent with this 1 minute volume spike right here. I think if the volume increases like this at the end of the day, there is a desire to have a position in the stock for open the next day. That's the logic. I do anticipate seeing a run off in the morning. I don't know what's going to happen in pre-market and after hours. At this point, it could be a gap. We could see a gap up. I don't really think we're going to see that gap up, but I'm not going to take it off the table. I'm thinking tomorrow we rise, we return into the previous day's range somewhere, and then there's a correction. And that correction will give us our second shoulder. The bounce from that correction should be, or is the opportunity for the breakout price. It is really early to be calling this pattern, but I have had a lot of success with this inverted head and shoulders. It's shown up 3 or 4 separate times, and I think it really is just that the floor is slowly rising, and these higher lows are forming this ascending triangle on my daily chart. It all makes sense. I've been watching it, and we're just going to see if this price trend continues in the same way as it has in the past. I believe that it will. You're also going to notice on my 50-minute chart that I have a target for an ascending broadening wedge, and that target was $38.05, within pennies of today's low. Within pennies. And it was when this price target was met or reached that the implied volatility also bounced and began to rise. Looking at the implied volatility a little deeper, it is interesting to see that the drop, this spike drop, it was almost, it's just a little further past the bottom that we put in today in this IV. So I don't know what's going on. That looks really weird. And you can tell the last couple of days we've been in a downtrend. And that's because the price has dropped the last couple of days. We're going to zoom out a little bit and get some more context on that though. And this is what I'm talking about. This purple, this violet pattern, this is the ascending broadening wedge. And it had two price targets. The bottom was at this $38 level and the upper side was at $49. I'm going to say that this pattern has officially played out, and so I'm going to go ahead and gray it out. This is how I manage my charts. I use colors to identify patterns I believe are still active or haven't been completed yet, or are just simply cluttering the charts. And so it's important that I keep a clear vision, and I want to just gray out anything I can. So that is the ascending broadening wedge, and it has now played out, so it becomes gray. There is some cleaning up I need to do, and I wanted to talk through it as I do it. I don't want to be altering my charts or my patterns very often, and when I do revisions, I want to be really open about it and let that be seen. The whole point of making these videos is to kind of catalog or diary these forecasts, and then be able to evaluate them in retrospect. So I want to be really clear and upfront whenever I'm changing anything that might affect that review in the future. So while I'm talking about that, I want to mention that whenever I have a question mark at the end of a pattern, that pattern's not confirmed yet. It is in the works but not confirmed. So this broadening top, for instance, it had 1, 2 top points and then 1 and 2 bottom points, and like a little spike down here too for 3 on the bottom line. But this didn't come after a return to this top level. That third point should have come up here to confirm this broadening top. So at this point, I think we've moved beyond the range of that potential pattern, and so I'm going to go ahead and delete it with its associated price targets. And again, I don't do this very often, so when I do it, I want to be really open about it. And what this does is it helps clear up the narrative that we put this inverted head and shoulders in for a bottom. It ran into a pennant. We came up, we reached that pennant target, and then gapped down. And this gap down was a little suspect, right? Because let's be honest, the RSI was looking really good, the implied volatility was rising, and then just to see this dump was just incredibly frustrating, especially because it occurred in pre-market and after hours trading. The inverted head and shoulders that formed from there did play out, and it did reach its target. And then we had this. This was not a head and shoulder pattern. It does kind of resemble one. It's more like a roof. A roof is very similar to a head and shoulders pattern, but the difference is this: that there's going to be 3 touch points of this horizontal line, and I believe we have that. I'm going to zoom in a little bit, get a better view. If I pick this up a little bit, there you go. We have 3 touches here. All right, we have the beginning, this second point, this third point, and then when it falls through, it's a significant level. So I'm not going to call that a head and shoulders. I know I have in the past, but I should correct myself. It's really a roof, and the price fell. And we had an inverted head and shoulders. Or which inverted head and shoulders am I even talking about anymore, right? It's like hard to know. I think this was the roof. This was the roof. Okay, the price fell into this very small inverted head and shoulders, came up, and is now falling again. And I'm comfortable saying that there's 2 inverted head and shoulders in succession because the price has not risen above the prior 2 minor highs. So technically, the price is still in a downtrend. And this is something else that's important. The incoming price trend is a big indicator when it comes to identifying chart patterns. You're not going to see an inverted head and shoulders after a run up. You're going to see it in a downtrend. Some patterns don't work like that, like pennants and triangles. But generally, most patterns do. And so the inverted head and shoulders is like that. You need to have a downtrend. We're still in a downtrend, and it's possible that this head is defining this new bottom, which is around $38. It was hard to see the price drop today, but the price target for an inverted head and shoulders is derived from the height between the neckline and the tip of the head. And so the bigger the dip, the bigger the rip. And that is nice. That rip, if it plays out like I foresee it playing, it's going to bring us back up into the $45 region above that magical number, $44.44, at which price, if we get to close above, we'll confirm a double bottom, and that would send the price up into the 50s. Right now, we're stalling on the 4-minute chart as the price waffles in a handle. And I'm going to go ahead and pull it up right now. Enhance. All right, here's the 4-hour chart, and you can see the double bottom in yellow. It's breaking out of a downward channel. All right, this channel is broken. We've had so many closes above this channel, it's nuts. But you can see the first leg down, it comes up, and it comes back down. And this second dip represents a partial decline in that downward channel. That is a bullish signal when you're analyzing channels. We did see a gap form here, and this gap zone now is support. And that came into play today. I'm going to zoom in a little bit on that, get a better picture. All right. And you'll see that this handle from the double bottom is forming a symmetrical triangle, and we did fall out of that triangle today. We did in the AM, and that's this first bar. And the second bar is the PM trading. You're going to see that the body of this candle is exactly above that gap resistance zone. To see the price reject at that level is encouraging. That gap zone is going to provide a lot of support, and if we see two tests into it rejected with upside action, that is very bullish. It is very possible that the price tomorrow just comes right back into the triangle. There's no reason why it can't do that. In fact, that's what I expect to see. I expect to see a bar of equal height as to this one, and that's just where it makes sense. It's going to take a lot to try to break through that lower gap zone. And as volume has been decreasing, I doubt that the bears will have the momentum or the volume in order to push that price down. Now, while we are on the 4-hour chart, I do want to talk about the RSI. We did see this tick up in the RSI on the 4-hour chart, which is good. On the daily chart, that tick is not there because the recovery came in the PM and not the AM. If tomorrow is another red day, that is a huge red flag. If we have a green day tomorrow and we pull back up into the ascending triangle, and this symmetrical triangle, then we are good to go. The momentum is there. We're going to see the bulls start taking control. But as you can tell, the bulls are starting to lose control. The RSI is in general dropping, but it's not falling into bearish territory. So with that said, I'm going to pull us into the 1-day chart, daily chart, and turn on my daily drawings. Zoom in, enhance. And here we are. Okay, you can see it. We did fall out of the triangle today. It happened. There is a pretty good tail here, which is nice. That means that there was a bounce, and we know what happened in the PM. But the price did close about $1 below the triangle. To get back into the triangle, we only need to see a bounce up into the low 40s, probably mid 40s, which is very feasible. There's no reason why the price can't do that. I'm gonna pull up the RSI and we'll see what it looks like on the daily. You're gonna see it's just coming down. Alright, we had 2 good days on the RSI, but they were wishy-washy, and now this downturn. I wouldn't be surprised to see the RSI bounce at this level like it did just a few days ago on the 10th of November. Okay, more than a few days, a couple weeks. But these kinds of bounces happen, and I don't think that we're going to be seeing the RSI drop below 45. You can see that the RSI does dip below 45 here, and as soon as it breaks up above, it tends to find strength. Okay, and as it breaks down below 45, it tends to return upwards. And recently we saw the RSI come down and recover before reaching that level. So now that we're at this same relative point, I would like to see the RSI continue to show strength by bouncing before reaching into bear territory, which is below 45. I consider anything above 55 bullish, everything below 45 to be bearish, and the oversold and the overbought regions to be relative. Really, those two levels, the overbought and oversold and the RSI, are used in making momentum trades, and you make those trades as the RSI is leaving those two regions, not based on it's touching it, but when it enters and leaves those regions. So there's a lot of space in between there. I watch for oscillations between the 45 and 55 levels, and I consider that to be coiling. It's not really coiling, it's an oscillator, right? But you know a windy toy, right? A windy toy is a circle, and this is kind of my oscillator. And I feel like as the RSI moves to 55 and 45, it's a continued tightening of that spring. And it's been a pretty good model to analyze when price is going to move so far. So we'll see if that holds water. We'll see if we don't see it tick up tomorrow in the RSI. Again, let's talk about volume. It was low, super low. What, 27 million? That's nothing. It's 60% of the 30-day average, which is only 37 million. It's incredible to see volume this low. Eventually, we're going to see a spike again, and that spike is going to throw IV up, and the price is going to jump. Implied volatility on the daily chart is still rising. It did tick down today, but it is still above where it was 2-3 days ago, easily. And you can see this, that there has been a continued downtrend in the implied volatility until right here. And then it changes, it flops, and it starts rising. I was really hoping to see a run today and see an acute increase in this indicator, but that didn't happen. Maybe it'll happen tomorrow. I would absolutely be devastated to see this implied volatility keel over and fall below this trend line that it just set. This would be the red flag. This would be scary and actually kind of worrisome. Today was a scary day. It really was. It was red and it just kept falling, and it was one of those moments where you had to wonder how far will it fall. But again, it was only one day and we are still seeing higher lows. This candle did not reach below the last minor low, which was $37.50. All right, so this low was 38.07. It was 50 cents above, 57 cents above the last prior low. So overall, I don't feel like this is a true breakout. We're gonna need this to be confirmed tomorrow with another red day, And if the price comes out up and ends up here, that's probably not great. We really do need to see the price move back into the triangle, and with any luck, close above today's high of 42.03. And that is kind of asking for a lot, especially before a holiday. I really don't know what's going to happen on Friday because it's a half day. That probably means volume's already going to be pretty low, which would be indicative of a move downward. But again, we had a lot of volume at the end of the day today, which means I think people want to be in a position tomorrow because the price might rise. So with so many things kind of coming to a head, it is kind of just a hurry up and wait situation, and I am holding my breath. I really am. And that's what I have for today's video. Yes, today was red and it was scary, but I think that there's still an opportunity for some very bullish action to be seen tomorrow, especially with the implied volatility rising and those last minute volume spikes.